as we go along. We have enough time, so that's great. Let me hand over to Ashish. Ashish is from Bloom, and Sada is from Constellation Blue. The format that we are going to follow is, after they introduce themselves, I think Ashish and Sada have a set of slides that we can go through very quickly, setting the context. But allow to take questions as the slides come up, and also address them at the end of the format in terms of a Q&A process. Over to you, Ashish and Sada.
Hey, thank you, Ravi. Appreciate. Thank you, Ty, for doing this. I think it's a great initiative, and thank you for having us on this. So I'm Ashish, and one of the 3 partners at Bloom Ventures, and we have made over 100 investments across the last 9 years of our journey. I look after early stage investing with respect to fintech, and also work on the growth companies in the portfolio, and have been an early member of Bloom since 2012, including, and I also work on fundraising for the fund, work closely with our LPs, etc. So thanks here, and would love to interact with all of you. Sada.
Hey guys, thanks Ty for providing this opportunity. And we're at Constellation Blue, we're happy to do these sessions, the events of sessions. And I'm one of the partners at Constellation Blue. Constellation Blue is the platform for venture capitalists and their investing companies in the areas of finance, legal, and compliances. We've been in existence for about 7 years, and we work with several funds and their portfolio companies.
So great. Let's Sada, while you bring up whatever you want to present, I just want to set a bit of thought process. So both Ashish comes from an investment perspective, has done fundraising, so he's going to give a few view on what the VC scenario is, while Sada will walk us through his slides. I am batting on behalf of all the founders and entrepreneurs out there. So I'll come with a dose of skepticism, if you may, and let's see how this progresses. Folks, whenever you have a question, raise a hand and kind of put the question onto the chat, and we'll see if it's relevant to the slide that is being talked about. I will stop and then ask a question. Otherwise, we'll try and address these together at the end.
Ravi, could you see the screen? Can you see the PPT?
Yeah, I can see the screen.
Okay.
Go ahead.
Ashish, you want to start on this?
Sada, go ahead. I'll pitch in wherever.
Sure.
Let's start with you.
Yeah, sure. So we have not seen these times. Many of these companies are not seeing what's happening, and always, we building. Most of the businesses are building for the kind of like the inorganic growth, fundraise, and there's a ample capital, etc. So these are all unprecedented times, so where we are seeing that another fundraising will soften significantly for next couple of months for sure. So already a lot of the funds that are coming out with their communications to their portfolio companies that extend the runways for at least good 12 months. There's no checks are being issued, so do everything that's required to extend the runways. So starting from the sequence of the world to every investor has issued their own kind of like another inputs to their portfolio companies. So so in line with that, we kind of like today we cover about what are the things that a finance function has to do. It's a very critical function right now for every company than ever.
Sada, quick one. Can you make your presentation full screen there? Put it on display mode. There's a request that they can't see it. So on your presentation, the right-hand bottom corner, make it on display, full screen.
Yes, Sada, could I please request you to also speak a little louder? Thank you.
Is it better now?
Yes.
Okay. So the finance function is
Great.
more critical than ever before. The controllers and the CEO, the finance team has to really work with the business teams and operations teams to make sure that the runways are extended. So we all seen that the funding. Am I audible? Hello?
Yeah, we can hear you.
We can hear you, Sada.
So that while you're bringing the slide up,
Hello.
Yeah, okay, go ahead.
So it's very important to have the continuous communication with all the stakeholders, investors, employees, and customers and vendors. These are all the testing time for all these companies. So from our interaction with all these, the funds as well as the portfolio companies, we advise them saying that, hey, have the continuous communication with all the stakeholders and focus on those investments which are really matters for the sustainable growth. Often, in the normal times, we would have accumulated a lot of discretionary spends. Many times, these have been overlooked at. Really look at reducing those costs as well, and critically, the cost of servicing the customers, the productivity of the teams, as well as the headcount and all other overhead spends. Ashish, you want to add anything on from a VC standpoint?
Yeah, sure. So my So my limited view has been that we do expect that there is going to be a fair bit of slowness in the way VCs are investing. I definitely don't feel that they will be zeroing down on investment activity. If there are VCs who have finished their fundraising and have deep reserves, they will definitely be there and look to make investments. But there will be a fair bit of readjustment that all investors will make. When broadly we are working with our portfolio companies to ask them to conserve their runways and cash on hand, it will be a near similar thought process in the minds of the VCs as well, where they say that, okay, let's prioritize supporting to our existing portfolio, which will mean that we should be investing in them if they need capital at this juncture. There has been a fair bit of jolt that the system has received. And even when the lockdown does go away, I don't see how these things are going to get normal very soon. People have had different opinions. The optimists are believing that they will see things coming back to track. There are some skeptics who believe that things will take until next year. Just to put things in perspective, the scenario that we are witnessing is not comparable to the challenges we faced around the Y2K and the time that India was reeling under sanctions in 2001, followed by the Twin Towers collapse. Neither it is comparable to 2008. We are at a point where the whole world is stuck, and consumption and supply chains and cash cycles have been hit completely. What that means is that even for consumption to come back, this is going to take at least a quarter. And from thereafter, for the overall business cycles to kick in globally, between countries, etc., it was going to be at least a slow process of recovery for another about 3 to 4 quarters for things to come back to normalcy. Might sound a little too skeptical, bear with me. Happy to justify and answer more questions as the session progresses.
So Ashish, I will cover a couple of points and then we'll come back. There is a question that was out there. So I'm kind of speaking on behalf of some of the entrepreneurs here. So
sure.
An entrepreneur typically would have 2 or 3 kinds of people out there, right? Those who have raised cash and who have 6 months plus runway, let's say 12 months runway if they are in a great shape, given the condition. The recipe is the recommendation is very clear: conserve cash, right? I mean, that's the prime set. What about those who were in the process of fundraising, who have not closed any fundraising? And then what about those who were planning to fundraise in the next few weeks or months? What do you think they should look at? What should they do?
So if I were to try and just simplify, I'll merge the category which was planning to fundraise and those who are in the market, with the assumption and belief that even those that were planning out there would be going out because they don't have a runway for themselves more than the next 3 or 4 months, or maybe 6 months. And I'll cover last for cases which are flushed with money. I'll come back to it later. So what we are seeing as a behavior is that people are hit hard by the current reality. What that means is there is a chance that if you're in the midst of a fundraise process, your investors come back and said, I need to go back to my IC because this is a fair bit of adversity in the environment. We can't proceed. And those who want to proceed, some of them are saying that we should relook at the valuation. One can question this. We were in the midst of a few investments. We are sorted and we want to see them through. We don't want to revisit. But that's the stage at which we invest in. I don't want to get into whether it's good behavior, bad behavior, whether it is fair for people to renege. We have suffered, a couple of companies in our portfolio have faced that. Let's keep the behavioral aspects of it aside. But you will see that trend where people want to readjust. And the logic of that readjustment is, if you are going to go out in the market in the next 15 to 18 months once again, you will have the same problem. And we also want to make sure that when they've invested, it allows the company to go forward. And if we don't get our ability to get a markup on our investment, we should just write back a little bit so that we are in a good position. Founders that have not gone ahead, or founders who have been planning to go ahead, there will be a fair bit of headwinds. There will be a few people who would still go out. My advice and suggestion is, at this juncture, go about raising money if it is available. Don't care too much about valuation and dilutions. Every company that has gone on to, or that will go on to build a unicorn status business, will have to go through at least one slowdown of sorts, or one mega slowdown like what we are in the midst of today. So in a scenario like that, if you have taken it at the time of your initiation of your journey and then things get better, there will be a recap done. So if today you have been lowballed by valuation and you have over diluted, I think that's completely fine. Get money in so that you have visibility for the next 12 months, 15 months, 18 months. More the merrier. And get with your business plan. Move on. What to do after the funding raise, we can take it later when Ravi might have a follow-on question on that. But this is my bit of advice, that don't sweat on terms. Get focus on the investment per se and get it in.
Yeah, good, Ashish. So just as a person who's been sitting on an angel investor piece with a few investments who have gone through, or who are in the process of going through the same issue, I have two recommendations to those founders, and I'll repeat that here for whatever it's worth. First and foremost, be shameless. Don't be a superhero. Go and ask for help, right? And I think you'll hear me repeating this again and again. I think at times we feel that we have to be superheroes, that we can face the world without any help. Go ask for help. I have insisted on most of my funding, all my investees, to go and say, please go back to all your investors, whoever they were, and say, look, can you help? Can you pitch in whatever shape and form? However, with the simple fact that if you go back, be very clear that there is going to be, if it's a convertible, in one case, I even recommended that they take a discount of up to 50%. I know some of you are going to scream and say that's way beyond what they should be doing. I did recommend that. And the only point that I've said is, look, some of this will take 100 days, and who knows what the plan is going to be in the next 100 days. So keep your options open, but please go and ask wherever and whenever you can at the earliest, because it is going to take time for people to make up their minds. And incidentally, the IC that he mentioned was the investment committees that all these VCs have. So if you miss out on terminology, just ping it on the screen, and I can help you with that. Right. So the second piece is stakeholders, right? What is happening on the VC side itself, Ashish? What do you see VCs going out and doing proactively to help either their portfolios or even angel investors? Have you heard of anything else that's been happening? What do you think's been happening?
I would say fair bit. So a fair number of investors, the initial phase was all about stock taking, if I can say that, where VCs or investors were taking stock of what the situation was, where the particular portfolio company stands in terms of its runway, in terms of its metrics, what kind of hit they will face over the next few weeks of lockdown, and what will the assessment be once the lockdown goes away. Let me also tell what we tried to do over the last 3 weeks. So as soon as we figured out that, yeah, we are going to be working from home, and we have to be in the confines of our desks at our bedrooms or living rooms, we got going with a series of sessions for our founders to get the right quality of feedback from various stakeholders in the ecosystem, whether that is founders of unicorns, whether it is CXOs of large enterprises. The idea was to make sure that you are getting your founders a fair bit of clarity in what people are viewing at the highest level. What that meant was that founders are able to get a very high level perspective from various constituents of the ecosystem, get best practices on how some members of the ecosystem evolved their practices around the 2008 slowdown, how people behaved, what is the expectation you can have from employees, so on and so forth. And this was led by some of our own founders who came on to openly sharing their situations. And when group of founders share their challenges amongst themselves, there's no better room filled with founders talking about their experiences and their learnings. So I would definitely encourage everybody, and you don't need to be waiting for somebody to come and do that for you. I think it's only fair that you get into groups and talk to each other and figure out how you are facing some of these situations. And thereupon, we got down to ground realities on smaller groups and company to company, one-on-one or two-on-one chats with specific companies. And there has been a fair bit of help from other VCs with respect to their own portfolio also. So there has been a fair bit of movement around.
Sure. So just a point on the founders piece, maybe I'll pass it back to Snigdha and Vijeta. That's a very, very important point. I think there is a role for TiE to probably step up.
Absolutely.
And set up some of these in smaller groups, right? Because I don't know, it shows 237 participants, 238 now. I'm sure some of them are tech companies, some of them would be SaaS, some of them would have operational heavy attributes to their business. Some of them will have different industry verticals, fintech, health tech. Some of them could also be in edutech. So I think it's easier to go in and try and figure some of this out. So maybe a note for us on the TiE side, Vijeta and Snigdha, that we'll try and work through this. Coming back on the people coming, one of the pieces that I've had is where, when working with the founders, we realized that one part of the business, Ashish, was kind of not going to be viable over a period of time. So we had to take that very hard decision to say, focus on something else, even if it means that you have a clear plan to defocus on a particular line of business. So what's the view along from a VC perspective? Would you encourage that? And along with that, there's another question that where somebody has said that if they want to get involved into solving some of this COVID problem, would there be an encouragement of using part of the money that is already sitting in the bank to repurpose them?
Okay. So, Ravi, on to your first part of the question, I think I would definitely encourage all efforts to ensure that there is survival. To the extent it is not opportunism, and to the extent it is within the perimeters of what is fair and reasonable. So founders are going to be putting all the discretion in place and making sure that they do all that it takes to see through the current scenario. The mandate that we are trying to give ourselves and to our teams is that do all that it takes to see through our portfolio through the current scenario. So that's perfect. And if that means cutting out one part of the business that is not doing too well, yeah, I think I at this opportune for me also to draw out to Sada, where they work with a lot of companies on the financing, conserving cash, helping companies to work with the SIDBI assistance scheme for taking debt. They do all of those. They can pitch in on those aspects as well. So it's perfectly fine to focus on where your strengths are going to be, the scenario post COVID, on what is going to be more favorable, and just focus on that. Anything that is guzzling cash, put it into a deep freezer and get into conservation mode. The second part, I didn't quite fully
So
understand.
if they had cash and they were in a area that they can actually help go after some of this COVID fighting. Let's say they have the ability and they want to go after creating hand sanitizers or something that will help fight this war. Do you think it's something that they should look at now, or it's kind of too late? Water has flown under the bridge. They shouldn't be getting into spaces like ventilator. What do you think?
While it's a noble cause and the startup system is all about idealism, so don't mean to discourage that. However, I would like to just present a couple of realities. A fair bit of work has been done by the systems over the last 2-3 weeks. So certain infrastructure has been created. So before a company allocates its resources to solving any part of the solution, would definitely be very critical to figure out what is the infrastructure that has been created, whether it's stock of sanitizers, it's ventilators, capacity for isolation wards, etc. Please figure out, there are government sources that are willing to share information. Please figure out what is the need before allocating your hard-earned money from the investors or from anybody else. And once you have assured yourself that yes, there is a gap in the market and you have a runway enough for 18 to 21 months, yeah, please feel free. We need all and more help that is required. But don't find it selfish at all to make sure that you have responsibility of your 40, 50, 100 employees on your shoulders, and you owe it to your own self to see the current business through. I don't think we should count it as selfish. Once you've balanced it out, please feel free to do whatever you have to.
Sure. Last question before last comment before we do. One of the things that we talked about was focusing on your customer revenue. I'll stress the fact that it's a hit that everybody has taken. I have seen revenue suffer across the board. I have also seen order book suffer across the board. So the first and foremost that I would recommend is don't look at revenue just from a blanket of have I got a purchase order on hand and am I delivering to something. I think this is a time where you should also evaluate who your customers are, how deep are your customers' pockets, and who is your customer's customer, right? So go one level deeper, please talk. And as I keep saying that, it doesn't hurt for you to keep in touch with your customer, always be in touch with your customer, but also go one level deep. Don't stop at the purchase order that you have in hand, right? With that, I think
very valid.
Sure. So there are a few questions related that I will want to complete on the VC perspective, Ashish, before we move on to the next slide, because the next slide I think is mostly on the cost side and a few other things. There are a few questions coming up, and to say that what about which industries would you go after, or which would you back? There's obviously talk that the edtech is going to see a lot more change. The health tech is probably going to come up. Then there is so there was a question on shared office space. Incidentally, I have an investment in a shared office space piece where we are going to see that really get questioned or that really get stressed as an asset class. So what do you think from an industry vertical? Is it too early to say from a VC perspective? What do you say?
Look, the situation is temporary. There are going to be, we will come out of it and we will go out and work. A few changes will come about. There will be people who realize the fact that they will be working from home and they can do better. They can have enough infrastructure support even at home. So people will definitely be okay. There will be less stress on travel. So there will be less stress on travel. There will be optimization that people will seek, but it's not that those things are going to go away. Edutech, health tech definitely will do well post the COVID thing. Some parts of fintech like insurance tech businesses definitely will gather some momentum. There are enough fintech companies that look at capital markets. They will also force upon a rethink. So I think across the sphere, anything which is going to be adaptable, anything which can move seamless into a virtual world and execute things will definitely see a fair bit of momentum. If something is going to be only offline driven, well, a large population will come back to the behavior, but a significant population has had the flavor of reading newspapers online, of consuming various content online. So those things will definitely have 1.5x the audience that they were pre-COVID and pre-shutdown. So those things are going to be better off. But it's still early. I don't think we should tactically create businesses, but we should be more adaptive to what we do.
Sure. We'll move to the next slide. We'll come back with a few more questions. Sadas, if you can just go to the next slide and walk us through that, please.
Sure. So as I highlighted, so the business has changed growth over a period of time and accumulated a lot of overheads. And in normal scenario, it was fine. But now in the current scenario, everybody is talking about extending runways and how the revenue would fall short. The customers are not paying, etc. So we thought we would list down few areas the finance team should look at it, where they can reduce the costs, or they can change the terms of their contracts and stuff like that. And this is not specific to one particular industry. This is a generic applicable for most of the industry verticals. So let me start with saying it's the first one is a customer and supplier contract. So evaluate what are the payment terms to your suppliers. Open purchase orders with these suppliers. Whether you can get in better payment terms with the customers. Look at the customer's business as well. So last couple of days, what we have seen, everybody is renegotiating their terms and conditions with their customers, etc. So this is one area that finance team should focus on. The second is the cash management policy. Often, we prepare a cash flow statement, but most of the company doesn't have a policy around a cash flow statement. What I meant is, align a cash flow statement should be aligned to a critical variables. For example, the accounts receivable days and how the customers are doing. Where are the customers able to collect their money from their customers? So align these the factors and the cash flow factors into all these variables. And in the current times, I would recommend that any change to these assumptions has to be a policy exception. It has to be approved by a mechanism where if you are giving an additional credit period to customer, and has to through a exception policy approval. This most of the companies doesn't have. There is a these decisions are done at a distributed level. It has to be unified in the current terms. And I know it could basically add additional days for the decision making, but this is very important from a org standpoint. So third one is the discretionary spends. So the CFO has to look at every line item in the financial statements, other management information reports. It could be very small expense line item, but accumulates, it can saves a couple of 100,000, I mean, lakhs rupees or etc. So it's very important to understand the discretionary spends. A lot of these tech companies, often kind of like subscribe for tech tools, which is used in one point in time for a certain development, but they often they forget to cancel the subscription. And I'm just giving an example, for the tech company, or maybe a marketing spend. There's a look at your funnel. What are the channels that you are spending your marketing budget, and how they are basically where is the conversion happening. So what is the cost per lead? Typically evaluate all these channels and look at is it really increasing our revenue, etc. So and the segregate these spends into fixed and variable, and understand saying that how the fixed cost and variable cost move based on your revenue and other aspects of your business. So fourth is control over procurement. Every company typically have a certain policy that the business leaders have certain threshold to make decisions on the spends, etc. Currently, what we recommend is that it should be centralized function, going up to the, especially in case of startups, could be CEO or a finance head, looking at all the expenses. Everything has to pre-authorized, review of the open purchase order and then delivery schedules, etc. So these are all the 4 different areas that on coming to the key activities. On coming to the cash flow, we recommend that
Sada, can I stop for a minute? Yeah.
Sure.
So just a few thoughts. There were specific questions coming up. I know there were questions related to, let's fix a few things, right? There were questions related to, the question was related to what do we do with payroll, right? So sure. if you want to be looking at what do we do with payroll, there is an issue. I know that, while the government has been pushing out notes to say that you're not supposed to cut any payroll, you're not supposed to lay off anybody, there's no furlough allowed, you're supposed to cover their full pay, etc., even for work from home. I'm batting on behalf of some of the entrepreneurs there. I'm saying, guys, there is a risk that you will need to take at some stage. My recommendation is have a deep and long conversation with your employees, because you are going to face a situation where either they will ask for the full payment for all the period that they are going to be there until the company itself disappears, or you have to go back and ask them to go back and take a cut in the salary. If necessary, realign that as one of the other things will come up in terms of what you can offer in a later time with ESOPs, etc. But you have to have that conversation specifically with your employees. On the cost side, another recommendation that I've had or I've kind of come up to looking at all the scenes is, I have learned in the last 2 weeks to differentiate between what I call as revenue acquisition costs and customer acquisition costs. So if you think about marketing spend used to be 2 ways. One is a lot of it was CAC, the customer acquisition cost. I've actually gone back and said, don't spend on CAC unless you are going to take an existing customer and increase the revenue from that particular piece. So I'm going after these kinds of differentiation when I go down and talk to the CEOs or the CXOs of the investee companies or anybody that I can help with. Go level deeper, differentiate between marketing costs at a high level to revenue generating costs versus customer acquisition cost. Start working through that piece. And there's a piece on that's just for others. There's a talk about SIGB and a few other things. We'll come to those as we go through. We have another 25 minutes. Go ahead, Sada, with your next.
So just taking further on the compensation. So what we are recommending is that for folks, you could think of giving an ESOP, and also think of giving a long-term retention bonuses, where you're thinking of cutting the salaries. So one word of caution here, when you're talking about cutting salaries, as Ravi you mentioned about the government directives, etc. So there is a tax implications as well. If you are kind of the deferring the salary and versus the reduction of salary. So deferring salary still have a TDS liability and versus reduction in salary. So you need to make sure saying that what you are like if you are deferring, make sure that there is a kind of like a confirmation from the employee accepting that the deferral that it's the liability arises only on a certain event, whether it's a like he's staying in the company or in a certain periodic basis, etc. So coming back to the scenario, so finance team should build these scenarios where it's a 30 days, 60 days, a quarterly, half yearly scenarios where how the fixed cost and variable cost movement happens. So it's very important to understand, you build a base case, worst case type of a scenario. What happens if a critical customer doesn't, allow a critical customer, delay the payments, how do your cash flow looks like. So you have to make these assumptions and then build the scenarios. And other thing is the comprehensive review of the regulatory receivables. So government has recently notified saying that income tax refunds up to 5 lakh rupees will be released immediately, and the companies have started getting it. But you should kind of like write back to the income tax in case of it's more than 5 lakh, how government would kind of expedite refunds of those. And also companies who are looking for a year which they will not be profitable, think about applying for a nil TDS certificate in case of, especially in case of B2B businesses, or a nil TDS certificate in that scenario.
Yeah, so two other pieces. I will comment on one other piece that people have had. There's a question about rentals. Again, I would suggest that you go speak to your landlords on both office rental and anything else that you can work through. Incidentally, do not hesitate. For example, we have at least in two of my portfolio companies, they have managed to get at least half rental for the current month and the next month in terms of what they're going to be working through, with a view to review that as things change. So that's something that they have secured. If you can get it in writing, great. Even if not, at least you can go back and say that this is what is an agreement and put that out on an email. Have something that you have had the discussion in place as the CEOs or as entrepreneurs. You need to do that. There's only one comment that I will make. When you say cut costs, don't cut costs on everything. I think you have to prioritize. So for an example, there are cases where, I'll give you my own personal example. The first thing that I did was go and get a paid service on Zoom, right? I used to manage with half-an-hour slots, 40-minute slots and work through. But there is a place where you have to value your time and the continuity in discussions more than what you are paying for some of these tools. So please prioritize. So as I said, first thing that I did was go get everybody or ask everybody to take full paid versions of Zoom. May seem a small spend, but the time it saves is to start valuing your time much more than what you have, because you are going to get to be more efficient in how you use your time. Go ahead, Sada, the next
Sure.
one.
The other, I just wanted to come in for just a minute here. When you do analysis for extension of runways, whilst working with our portfolio, we gave a certain approach to follow. May not be very relevant for growth companies, but for young companies, first-time founders, I believe it is useful. We tend to typically take a factor and do a bit of sensitivity analysis of here and there. What happens to my business cash flows if I were to tweak this factor? The only problem with a simplistic analysis of that nature is that it is going to give you an answers which are going to be based on that one factor alone. I think you have to map the scenario again. What that means is, if you are a B2C company, a certain set of customer acquisition channel may not be relevant for the next 3 months or for the next few months. If it is relevant, you may not be able to afford it because of your runway. If you can afford it, the results that come from there on may not be very high. So you will need to basically make it a little more comprehensive. There's only so much of simulation and Excel that you can do. At the end of the day, one can take that view. But it is super important for companies to figure out, at least enterprise companies, on many factors that can affect cash flows. We tend to take receivables at face value because Procter and Gamble is supposed to make a payment to me, or HUL is supposed to make payment to me. One needs to take a slightly more conservative view of things and remodel some of those to really get a pulse on what the cash flows will look like and be ready for those. And the other challenge is that when we are all telling everybody to stop cash flows, do understand what it means. What that means is everybody is following that mantra of stopping cash flows. At times, people genuinely end up stopping cash flows which are due, saying that no, we have been hit by COVID, we'll pay later. Well, people, those who have luxury, should not stop it. The economy can come to a better shape if cash starts moving faster. And the only way it moves faster is across the cycle, the cash circulation doesn't stop. So if and when you have the luxury where you can have your runway and visibility beyond 18, 21 months, be pragmatic about your decision making as well. You would have opportunities to go back to people and say, we owe you money, we'll pay you. Can you give us a bit of discount? So there are going to be opportunities for people who have cash, leverage those. There are challenges for people who don't have money, optimize it.
Sure. Thanks, Ashish. Go ahead, Sada. If
Yeah.
you can
So
move to the next
moving
one.
on.
I think we'll have to move slightly faster. It's just
Sure.
that.
Sure. So moving on, what are the alternative funding that the companies should look at it? So we tell all our companies saying the customer is the best investor. So take care of your customers. Make sure that they're get the services, etc. So other alternatives are you can think about like bill discounting with the financial institutions or cash discounts with the customers. That's one ways in how we can make sure that cash inflows are coming in. The two other is the government schemes that have been announced recently for the startups. One is an Action COVID team grants basically. These for the startups, which are in the areas, solving problems for medical equipment or related ancillary units, which helping to get the medical equipments or in the services of helping in the COVID testing, etc. So there are a bunch of VCs who came together and put a grant scheme. And the criteria is that the company has to be in the business of medical equipment or related services. So companies which are in that area could apply for this grant. And,
yeah. So Sada, just as a quick one, this is a across the VC fund. I think the initial fundraise was 100 crore. There is a particular website. You can go to that website and look at it. And they're promising a very fast disbursement. Incidentally, I know one of the first companies one of the first sets that have been funded through that. It is part of the startup versus COVID piece where they've taken telemedicine out. So it's supposed to be a quick, less than a week disbursement on the ACT side. It's a safe instrument.
Yeah, so they're giving it as a grant. So there's no equity. Basically, they're not asking for any equity or any of the capital instruments there. So the second one is the government initiated startup assistance scheme. Up to 2 crores, the government going to give, SIDBI is going to give the funding to the startups. There are few conditions, and I'll just go into the final details of those scheme in the next slide. Before that, I want to touch upon, there is a MSME loan scheme, loan in 59 minutes. There may be, when it announced, maybe startups would have overlooked that scheme. Maybe it's the time to look at it and see that if they're eligible to get certain working capital there. So
a bit of a healthy skepticism on that, on both of them. I know I'm kind of acting off in that piece, but I would say look at other sources before you spend a lot of time on that until things settle down. It may sound odd, but a bit of a healthy skepticism.
Yeah. Sure. So talking about a startup scheme by SEDB, so there are a few conditions, criteria. The startup has to be VC funded, at least one round of funding from in VC, and it has to be unit profitable. The startup unit had to be EBITDA profitable. That means not net profitable requirement. It's just that at a transaction level, startup has to have the profits. So that's basically revenue minus cost of acquisition and conversion and cost of service. It's a very high level ways to look at a unit profitability. Then the startup need to have a turnover of 10 to 60 crores in for FY19 and then FY20. And this is given as a loan for a tenure of 36 months with the principal repayment start from end of 12th month with an interest rate of 10.5%. So these are the silent features of the startup scheme, startup funding scheme by the SEDB. Any questions on this? I'm happy to clarify.
No, I think let's move forward on the few other things because there are a few questions that are coming up. I think we should switch to that mode unless there is something else. Ashish, is that?
Yeah, fine.
Yeah. So I will just go through some of them. One of the questions is, do you think the effect is going to be more on a B2C rather than a B2B? I think you kind of addressed that. I would say it's kind of open-ended. All of them are going to go and figure out. In my opinion, I think you should not focus on your customer, but your customer's customer as a starting point. What do you think, Ashish?
I fully agree. So in enough conversation that I have had across the portfolio, I have asked this question to the founders and the CXOs with whom we have been having our meetings. So we have insisted that people track their top 20 customers or customers that occupy the top 70-80% of their MRRs and ARRs, and be assured on what's happening on their balance sheets and how well they are in terms of their financial positions and short-term solvency. I think it's quintessential. The impact is happening at both levels. It is at the P&L level where people come back and say, we don't want to go and continue with the contract. We will stop your services. That hits your P&L. You will have less revenues to account for. And then there's a balance sheet impact of cash. People come back and say, we will not be able to pay you for 60 days or 30 days or whatever. Or people are asking for a discount or a haircut. So both situations end up hurting, depending on whether you are a startup which has enough money in the bank or not. So tracking the customer, making sure that, understanding the fact that at the end of the day, the person who is sitting in the customer's office, if he is not a founder, he is going to think about his job as well. So he is going to be conservative and not be really willing to fight a system and say, no, we want to implement a new technology or a new product against all odds. Everybody will put their initiatives into a bit of a deep freezer, if I may use that word.
Sure. So another question, I think it was specifically addressed to me, situation where the firm is dependent on monthly revenues. Mahesh Jain has asked, what do they do? First and foremost, try and work through those examples that we gave you. But one of the things that I want all of the entrepreneurs to think through is this is not a time to get into a debt trap. Even if you had to take a hit on valuation, please try and do that. Because the reason why I'm asking you not to get into a debt trap is we have no visibility to revenue growth. So I would actually focus on that and not get into that piece.
Yeah. So the debt does extend the runway for sure, but then you'll have to pay it in a certain time-bound fashion. And you don't know till when the scenario lasts, when your revenues will come back to normalcy. Only thing in control is your cash outflows. So see how you can manage on that and equity raise. So debt only when you can service it.
Sure. There was another question. Would existing investors be okay if there's a valuation downgrade? I would say absolutely, because it's a matter of survival. Ashish, would you guys worry if there was a down round?
No.
Actually, a lot of them would be protected. They wouldn't care.
No, I don't think. Look, I want to say this. Most investors would not go and try and invoke their protections. The idea would be to support the company through the scenario, and most investors will basically take the view that either I can fund it on my own, and then I will say no. So if we have a scenario from our portfolio where somebody lowballed with a term sheet, we're going to say no because we have the wherewithal and the capital to support. In older funds that we don't have, and if something like this is happening, we will cooperate with the founders and take it through without pulling our triggers and say we'll invoke anti-dilution. I think that's not a fair time to invoke it. Let's keep it for some other day.
Sure, great. Good to know. So there was another question from Srinivas Murthy was asking, would import substitution be encouraged with VCs? Srinivas Murthy, I mean, I don't think that's a VC question. If you're looking at a trading and a short-term opportunity, no VC would probably look at that. That's a pure structure. Again, I will let Ashish answer that. But I think VCs are focused on long-term returns where you are actually building a business, where you're adding value to the equation than just being a trader in that process.
No, everything is up for a change, but few fundamentals of working will not change. VC is a 10-year business. Every time we invest, we take a 5, 7, 8-year view. So these tactical ROIs and IRRs are not going to change the way VCs invest.
Sure. There are a few raised hands. I will open it up. Snigdha, can you open up? Shilpa and Prabhu Kumar had raised hands. I don't know if they have questions.
Certainly. Shilpa, do you have a question for us?
No,
Shilpa?
I think Mamta, Prabhu Kumar. I don't know if.
Prabhu Kumar, do you have a question? If anybody has a question, please raise your hand and we can connect you.
Yeah, Mamta there and Rekha Lal.
Yeah. Mamta, would you like to speak?
We can't hear you, Mamta. Why don't we go to Rekha Lal and then come back to Mamta later on?
Sure. Rekha Lal?
Yeah. Hi, I have a edtech platform to help language learning online, and we are actually not at all negatively affected by whatever's happening. So
I'm sure.
yeah, so whatever you say is sort of just water off a duck's back, actually. So I'm listening, but I find that I'm not at all affected. So I'm thinking actually of going and swimming, meaning going and marketing to B2C customers, and so what are the channels you think I should use? Have the costs
You are in a very lucky place.
It's not luck. I have worked very hard on my venture. Believe me, you don't know how hard I have worked, and it's been to create this setup where I am protected from many risks.
Rekha, can we have the question, please? We have a few other raised hands.
So how do we? Which are the channels of marketing do you think are good in these current times for B2C customer acquisition, and also if there are any B2B opportunities like corporates? They have a lot of e-learning budget. So how do I reach them and say, please offer my courses? Like, for example, school courses, we have school courses, so they're now down and out. So can they at least refer it to their employees?
No, I mean, I'll take a stab at it. I don't know if Ashish wants to do. I don't know. I mean, first and foremost, you are in a good place for a very simple reason. From what I know, the CPC, CPI rates have dropped dramatically. So you'll probably get much more traction for the dollar that you spend on any of the traditional marketing channels, right? The other ones, I think they have a bigger war to fight and a few other things. So I'm not too sure if you should spend any money there now or wait for another 2 weeks or try and figure out how you can ease that in. That's just my third-party perspective on that.
The only bit that I want to add is while the usual channels apply, but I think in today's time, depending on how relevant the product is, we also have to study a bit before we make an assertive answer. But Rekha, for whatever it's worth, the influencers today can be of good use. The influencers are going to will love to engage with any opportunity that you bring on to them to make their money by helping your startup flourish and take the message out to your potential customer. So please find a way to engage through that as well, and also reach out to other channels which are today still live. For example, mediums like Zoom, etc. Whatever platforms that offer for collaboration, we should look to tie up with them. But anything more would be something which is a function of knowing your business a little better. Thanks.
So there's another question. I saw it just come up from Ravi. Hi, Ravi. Ravi Kuraj is asking you, Ashish. And that's a treasury question. If they are sitting on a lot of cash, they have high liquidity, what would be their best investment from managing their cash? How should they go about doing this?
So, Ravi, sir, slightly old school. Even in the best of scenario, I am a fan of FDs across top 10 or 15 heavy lifting banks. Nothing more than that. The startup's business itself is good enough risk. So beyond that, they should focus on keeping the money safe. I would not advise anything beyond that.
Yeah, there was a similar question on somebody asking what's the best mutual fund. I would say I have no idea. I would trust the people who are better suited to answer that question than at least me.
One can't rule out market risks. Even if you're putting money in the T-bills, one can't rule out market risk factors that can affect. When you want that money out on the day, what happens? The global factors affect us because the whole world is under the current situation. So I would say go by the top 10 banks and just be with them.
Sure.
So Ravi, there is one question I would like to address. Someone was asking, Saidana, what is the best time to get some professional help in driving some of these strategies, etc. So always it's better to invest early in some of these strategic initiatives. What we have done at Constellation is helping a lot of portfolio companies, taking this as a special project and for an outcome-based fees kind of a thing, and trying to sail through and implement some of these the cost reduction initiatives, etc. So if you're a startup and doesn't have a full-fledged finance team, you could always go back to your investor or sounding board or ask their advice. And then if you're taking a professional help, you could always ask for an outcome-based approach as well, rather than just paying some upfront fees or in a monthly fees as well.
Sure. So I think we're kind of coming through to the end. A question with Vijeta, Snigdha, do you want to work through? Is there any other question that's unanswered that we want to check now?
No, I think we've answered most of them. We have a few raised hands, but I think we're out of time. So probably take that up tomorrow. We have another session coming up tomorrow.
Sounds good. All right, everyone. It's been a pleasure. Thanks, Sada. Thanks, Ashish. Great to have you on. And thanks for sharing all of that. Guys, as if I had to close this out, I would say, don't be superheroes as entrepreneurs. We all think we can carry the world on our shoulders. Please ask for help. Be safe. Don't be sorry. Right? I think let's finish with that and have a smile. Thank you.
Thanks, Ty, for this opportunity.
Thank you so much, Ravindra, Sada, and Ashish. This is Vijeta here. I'm part of the Thai Bangalore team. I think fantastic session. Just to let you know the statistics, we had more than 200 people who not just registered, 900 registered by the way, but 200 plus people actually came in, listening in. So it was very engaging. I think all of us have learned a lot. And a real shout out to the Bloom Ventures and Constellation Blue team, because they have been super supportive to us. Just to quickly let everyone know that we're going to be having the 5th series tomorrow called the Surviving the Legal Battle. So Ashish, you're back there along with Dheeraj, who's a partner with the Constellation Blue. And Ravindra, as always, as a charter member, you have been super supportive. Thank you so much for everything. I know that a lot of people want to keep talking to you and reaching out to you because you have a pedigree, and really appreciate this. So please do get in back tomorrow at the same time, 3:30. We're going to be having a nice session around legal battle. And the Bloom team has been doing this for us. And we at TIE really appreciate all the support we're getting from the ecosystem. all the support that we're getting from our charter members. So thank you once again, Mr. Ravindra. You have been very, very kind to us. And have a fantastic day. Stay safe, stay healthy. Thank you so much.
Thank you, Vijeta. Thanks, Ravi.
Appreciate
It's a
that.
pleasure being with all of you.
Thanks.
Take care,
Thanks.
Sada. Good to see your face also, sir.
Thanks.
Yeah, cheers, guys. Thank you so much. Bye-bye.